This class is going to go over range bar charting patterns. First, use our currency meter to identify the currencies you most want to be in. It's clear that the Australian is extremely weak, so is the New Zealand, and the yen's the strongest. And if you look at the dollar, the daily, weekly, and monthly trend of the dollar pretty much was up from about 3:13 in the morning. So basically focusing on patterns in the Australian dollar to sell, Australian yen to sell, New Zealand dollar to sell, and New Zealand yen to sell makes the most sense. I've never done a class so far on the weekends, but I am always working and always trying to improve our tools. And right now my major focus is fully automated systems. And the first step of that is to mathematically identify chart patterns that I've always traded off of visually to get the computer to recognize these same patterns and take the trades. So we would be looking on the Australian dollar, Australian yen, New Zealand dollar, New Zealand yen chart for these patterns. And since all of them are looking for sells, it'll be very easy to go over in this class. There's two patterns that we look for. One, when you find a trend, a 3+ bar pullback followed by 1 bar going back in the direction of the trend. So an example of that would be 1, 2, 3, 4 bars up, 1 red bar down. You would sell this when it goes 1 pip underneath that bar's low right here, 63.80 for example. Okay, so this labels all of them on the chart, and basically we're only looking for sells in this particular currency. So this would be an example of one. You would sell this right here at 64.08, and you can see it really worked its way all the way down to 63.60. Most of us, if we were short right here, would have our stop right above the high. It's kind of working its way down. Myself, I would have probably got out somewhere during the sideways chop right here. You also always want to draw your fibs on the last swing to get an idea of where you want to get out. And since the fib area is so close to this 1.382 area, myself, I probably would have got out of that trade there. Now the next signal that you got is right here. However, it has to go 1 pip underneath that bar's low to get into the trade, and there's no entry method there. Here's another signal, and you can see you would have been in this trade. Your stop's up here, and you would have been stopped out with a loss. Losing is part of the game. You're going to have a certain number of losses, but they always have to be small. They have to be small. There's another entry right here, 64.14, and you can see it pretty much fell 10, 20, 30, 40, 50, 60 pips straight down, maybe 70. So you lose 8 to 10 pips there. You make 70 pips. You make 15 to 20 pips. This one more than gets rid of the tiny loss here, and you're left with a 70 pip net gain at the minimum. Let's take a look at the Australian dollar. Okay, so this is another one that you're looking for sells in. Here's your first entry signal, but it never really goes underneath that bar's low, it appears. So you don't really have an entry, so you miss that trade. Here's another entry. You'd be short right here, pip underneath the low. At 50, you can see it went all the way down to 31, fell 19 pips. So you should have made something on there, whether you got out when it kind of was chopping around sideways, or the trailing stop got you out. But you probably made 6 to 15 pips. All right, another one right here. You're short, your stop's above the high. It gets you in, it almost stops you out, and then it falls. You can see 10, 20, 30 pips. You get another entry right here, and it falls again. This one right here, you're short. You very likely would have got stopped out of here with maybe a 5 pip loss. So that's one of our entry methods. You find a currency where you want to either be buying or selling based on the currency meter. There's no doubt that the Australian was one of the weakest, and so was the New Zealand, and the dollar and the yen were the strongest. So you're looking for sells only. Now I created these signals for automated systems I am planning on releasing in the upcoming months. These are not available to our traders. These signals, our charts, I think are over cluttered as they are now, and I'm not going to be wasting time coming up with a new indicator. I'm working 100% on automated systems. These are for me to be using in my testing and for classes. So please don't email me. I'm not going to release these. However, you can see it in class, and it's a learning tool. I mean, it's very easy to spot these. You find a trend, you look for 3 bars up or more, 3 to 8, one red bar, you sell it when it goes 1 pip underneath the low. That's one of our patterns. Another one of our patterns, which I just added to the chart right now, looks for little sideways rectangle patterns. And when you know you want to be selling this particular currency, you're basically looking for this kind of pattern, and then when it breaks down through the low, you get short. So, you know, sometimes you have an entry in one of our systems right here, and the other one kind of waits for the breakdown of the rectangle pattern. The purpose of this pattern is the strongest trends usually don't have pullbacks to let us get into those trends. Markets will explode up and then go sideways like this, or they'll explode down and go sideways like this, but there's not a pullback. And it's really always been frustrating for me for years, until I discovered range charts about a year ago, how to get into these explosive trends with tiny amount of risk, because we're always risking, you know, our stop is just above the little rectangle range pattern right here. When do you get into these trades? And this is a very powerful tool for news trading, which, you know, when the automated systems and alerts are put onto the charts in the future, you will see the ability to get into the second wave of news releases using this pattern. You know, mathematically, you can kind of look at a chart and see when it's kind of in a very tight range. One way of identifying these is when one bar is up, another bar is down, the next bar is up, another bar is down in a row. We show these dots. That's one easy way of spotting these on range charts. And let's look at the Australian yens and the New Zealand yen. These are two very weak currency. The yen was stronger than the dollar. And so basically what you're looking for is these little rectangle patterns. Now this was during the news spike. It went the opposite way. The trend of the Australian is still down. The yen is still up. So you want to sell the Australian yen. But you don't really want to sell it when it's exploding up like this. So it pulled back a little bit, the trend's down. This is a relatively safe pattern to get into. And you're basically looking to sell it there. And you can see 82.20 pulls back all the way down to 81.80. Nice 40 pip move. Now if you miss that trade, you have another pattern right here. We're not looking to buy this because the trend's down. It does have a false breakout right here. But as soon as it comes down underneath this low, we're short again. 81.80 pulls all the way down to 30. Very explosive move. Let's take a look at the New Zealand yen. Starting the day off, we have, you know, I'll start right at midnight right here. Pattern right here, short. You can see it fell about 18 pips. You know, if you're one of those traders like me that when you're in a trade and the market either hits support area or resistance and kind of installs like this, you're out of half, and then you let the trailing stop get out of the other half. You know, let's just suppose this would be one of the exits at 03, the other half probably maybe at 96. Let's just say you get out of this at 64, you short this at 64.10. You know, after the spread, depending on your broker, you made 6 or 7 pips. Here's another pattern. Now, and it's conceivable that you might have gone short right here and lost 10 pips. All right, and then we have another pattern right here. Shorted 82, it went all the way down to 60. So you should have made something on there. And then here's another pattern, but it doesn't lead to an entry. Once you see these patterns like this, you know, and again, you can spot these yourself very easy. Up, down, is the mathematical pattern behind this one. And I have other low volatility rectangle pattern, you know, patterns I'm looking for mathematically to be used with automated systems, because this occasionally misses some of them. As you can see right here, this is a very nice looking pattern that this one missed. It did catch this one right here, and it caught that one right there. But once you spot these, you're looking to sell the low of the little rectangle. And you can see this one fell from around 64. I'm rounding down a few pips all the way down to 63.40. It's a huge 60 pip move. And if you miss that trade, there's another one right here, which, I don't think I would have even picked that up myself. I do see this one right here, and this particular pattern missed it because we had two down bars in a row, up, down. My other method would have spotted this one, which I guess I'll go ahead and put onto the charts right now so you can see. Okay, here's my other pattern recognition. And, sometimes they spot the same group, which this one did. The other one didn't catch this low volatility one right here because it had two down bars in a row followed by up, down. But nonetheless, that's the reason why there has to be fail-safes in trading, especially automated systems, because computers, when they're looking at a certain pattern, there's always a rule that kind of breaks it. In this one case, down, down, up, down. Doesn't happen that often in that particular format. Usually you get up, down, before the breakouts. But nonetheless, this one did pick that up, and you would have been short at 63.80. And you can see, again, it fell 40 pips. And what's beautiful about this is, it's a pretty high probability pattern when you spot these, multi-bar up, down, very low volatility. Typically the high minus low of this little rectangle shape is always less than 10 pips. You can see 90, 80, it's less than 10 pips. This one right here is less than 10 pips. This one right here is less than 10 pips. So it's very easy to visually, as a human, spot these on your chart. If you're looking for sells and you spot this little 4 to 5 bar sideways rectangle pattern with less than 10 pips high to low, when it goes below the low, you sell it. And then what you really want to do for exits is either use support resistance to exit half or use our sophisticated range-based intelligent trailing stop for exits. And I will show those right now. Here's the Australian yen. So, here's one of those patterns right here. You would have been short right here at 42. Our trailing stop got you out at 24. Nice 20 pip profit. Notice a 3-bar pullback here with 1 bar red. This is one of our other methods. Remember, 3 to 8 bars up, 1 bar red. You sell it when it goes 1 pip underneath the low at 24 right here. It got you out at the whole number, so that's 24 pip win. And when it gets underneath the lower containment band, I'm going to have more stringent rules because it's more likely to reverse when it gets underneath there. The whole purpose of trading is to take, lower risk, higher probability, high odds of the trade working and high odds of the trade giving you 2 times more profit than what your risk. And that's the whole key. That's what I'm always thinking when I decide to take a trade. Is this worth risking, my future, my family's future on this trade? Is this going to give me back enough profit, or is it, have the likelihood of giving me back enough profit in order to take the risk? So if the risk is small, like trading the Australian dollar on the short side, the Australian was one of the weakest, the dollar was one of the stronger ones today. It's a no-brainer to sell this, and you can see down, 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 down. That's why we have the currency meter. So you focus on the best ones, and they have a much higher winning percentage than if you didn't use a currency meter and just randomly picked a currency and randomly picked a direction.